A well-regarded chart analyst has suggested that the anticipated rotation into altcoins has begun. This marks a significant development many have been awaiting, the movement of capital into alternative cryptocurrencies. Historically, this process often starts with Ethereum, as its upward momentum typically signals the beginning of broader market activity across altcoins. This phenomenon, commonly referred to as alt season, appears to be approaching. Therefore, according to this analyst, we may already be in the early stages. However, even if the timing is slightly off, the likelihood of this rotation occurring remains high. Based on historical patterns and the insights of reputable chart analysts with strong track records, it seems increasingly evident that this scenario is the most probable outcome. None of these options are perfect, but they all have strong track records. It is evident that there is a shared belief among them that we are at a pivotal moment in time. I support this perspective because it aligns logically, which suggests that XRP could finally enter price discovery for the first time in over 7 years, a potentially transformative development. However, I want to emphasize that I do not have a background in finance, nor is this intended to be financial advice. You should not make any investment decisions based on my statements. I want to take a moment to reiterate a perspective I've shared often recently. I remain cautious about the potential for XRP to reach the higher price levels that some analysts I follow have projected, such as $30 or above. While I acknowledge that my outlook is more conservative, I also recognize the possibility of being wrong, particularly if an extraordinary influx of capital enters the market. Notably, there are credible individuals who believe such a significant capital inflow could occur. I want to highlight an example of this perspective as it's worth considering. Historically, as substantial amounts of money flow into Bitcoin, we often see a subsequent rotation of funds into other assets, including XRP. This rotation could play a key role in XRP's future performance. Once investors have realized profits from Bitcoin, particularly when they have achieved favorable outcomes, they are often not prepared to exit the market entirely. Instead, they remain inclined to continue investing, seeking opportunities in other assets that have not yet experienced significant growth. This pattern consistently occurs in every market cycle and is likely to repeat itself. For instance, consider this recent headline: Bitcoin at 200K by year end is now firmly in play, analyst says, after muted US inflation data. The softer than expected inflation figures from the United States on Wednesday may have paved the way for accelerated Bitcoin gains, potentially reaching 200K by the end of the year, according to Matt Mina, a crypto research strategist. Mina further stated that if Bitcoin decisively breaks through the 1 in 5K to 1 in 10K range, it could trigger a sharp rise to 120K. Mina told CoinDesk via email that Bitcoin could potentially reach the year-end price target of 138.5K by the end of summer. Mina added that today's CPI report might serve as a bullish catalyst for Bitcoin, potentially accelerating this target timeline by several months. If the current momentum persists, a 200K Bitcoin by the end of the year is now a realistic possibility. That said, most analysts I follow estimate that Bitcoin may peak this cycle around 150K, with some projecting slightly lower figures such as 135K, while others predict higher targets in the range of K170 to 180K. However, if Bitcoin were to surpass 200K, it raises significant questions about how other cryptocurrencies like XRP would perform, as such a surge would likely drive substantial movement across the broader market. Ultimately, no one can predict the outcome with certainty, which is why these discussions are both engaging and valuable for gaining perspective. I'm interested to hear everyone's thoughts, so please feel free to share your opinions in the comments below. While this idea may seem unconventional, I do not believe it is entirely implausible. Although I remain unconvinced that it is the most likely scenario, I acknowledge that there are reputable individuals who consider it a reasonable possibility. When I see price predictions for Bitcoin, I often reflect on their implications, particularly for my altcoins, such as XRP. While I tend to disregard the overly extreme projections from Bitcoin maximalists, I find perspectives like those shared by Mr. Mina to be worth considering. These expectations and possibilities prompt me to evaluate how they might influence the broader cryptocurrency landscape. The majority of my cryptocurrency holdings are invested in altcoins, representing a significant portion of my portfolio. However, I fully understand the implications if Bitcoin experiences a dramatic surge. A recent post by Chart Animal's Crypto Wizard highlights an important trend. The Bitcoin ETH pair suggests that the capital rotation from Bitcoin to Ethereum has begun, a pattern observed in every bull market. Ethereum is expected to outperform Bitcoin, which also bodes well for altcoins. This shift reinforces the importance of patience in the market. Ethereum, despite being written off by some as dead, has recently performed exceptionally well. The notion of its decline was clearly misguided, a point I have been emphasizing for months. The price of Ethereum has already approximately doubled from its lowest point, though it has slightly pulled back since then. However, it appears that its upward movement is far from over. That said, while this price action is intriguing, the chart I find even more significant is Bitcoin dominance, as it provides deeper insights. Many analysts, as I mentioned in my previous video, are suggesting that Bitcoin dominance is on the verge of breaking down. If this occurs, it would likely lead to an increase in altcoin dominance, a development that holds promising implications. As the saying goes, patience pays, and in this case, it can quite literally result in profits from altcoins. Here is a post from Chart Animals Crypto Michael expressing his perspective on the current market sentiment. He finds it amusing that many traders appear to be taking short positions at this point, just days before what could be a historic 8-year breakout. In his view, these short positions may end up fueling the momentum for the breakout rally. He sarcastically thanks these traders for their contribution to the market. His optimism stems from the belief that this is an inopportune time to short the market, given the lack of exuberance and the alignment of conditions similar to previous market cycles that preceded significant breakouts. He questions the decision to short in such a primed environment, suggesting that it may not be a wise strategic move. This perspective underscores his confidence in the market's potential for a major upward shift. This perspective comes from Chart Animals Bob, who poses several thought-provoking questions. Why is there so much fear and skepticism in the market? Why do we see such choppy price action and deviations? Why is there persistent anxiety over tariff narratives and other geopolitical concerns? Do markets typically reach their peak under these conditions? Is this what euphoria looks like? Are most market participants profiting in the current environment? What does it signify for Bitcoin to be near or at all-time highs in a market dominated by fear? Are levels that were once considered euphoric in the previous cycle now overshadowed by uncertainty? In his view, the answers to these questions provide a clear picture. The implication, of course, is evident. Markets rarely peak under conditions like these. No, this is not euphoria. Are the majority of market participants profiting under these conditions? Not quite. Despite this, prices have reached remarkable levels, Bitcoin exceeding 100K and XRP surpassing $2. The fact that we have achieved such heights without widespread exuberance is extraordinary. For many, this represents the potential for life-changing wealth, including for numerous members of the XRP community. Chart analyst Jackass recently shared an intriguing perspective on Bitcoin dominance, noting that it has remained relatively stable throughout this cycle. He pointed out that many fail to grasp the bigger picture, focusing on individual fluctuations rather than the broader trends. An interesting observation he made is that the next bear market lows could potentially be higher than current prices for many digital assets, offering a thought-provoking outlook. For instance, if XRP were to reach $20 and subsequently experience a significant correction, historically common in the crypto market with drops of 80% not being unusual, it would still result in XRP maintaining a value of $4. This highlights the potential for higher baseline prices in the future, even during periods of market downturns. If we consider the possibility that the bear market bottom could align with a significant price increase, it would suggest a level higher than where we are currently, potentially almost double the current price. In theory, this could mark the bottom. Now imagine if XRP were to reach $30, as some analysts have predicted. Even in the event of an 80% market correction from that level, the price would still stand at $6. This implies that at current prices, we may never see these levels again once the market gains momentum. Furthermore, it seems almost certain that the prices we observed before the election, such as XRP at $0.49, are unlikely to return unless the market experiences an unforeseen and catastrophic event, such as a black swan. However, barring such an event and assuming the arrival of a full-scale altcoin season, it is reasonable to conclude that XRP at $0.49 is now a thing of the past. At this point, it seems unlikely that XRP will return to its past lows. Similar to its trajectory in 2017, XRP dropped from $3.35 to as low as $0.10, but never fell back to half a cent, which was its starting point at the beginning of the cycle. Even at its lowest, it remained 20 times higher than its initial value. These current prices are not likely to persist indefinitely. In hindsight, by 2025, many will likely reflect on the opportunity available today and wish they had invested in XRP when it was priced at $2. Looking further into the future, it's reasonable to expect similar sentiments as individuals recognize the potential that was present at these price levels. Chart analyst Dan Gambardello recently shared a video where he discussed XRP, prompting me to watch and reflect on his insights. Dan made a compelling point that aligns with what I've long believed to be logical and well-founded. In his video, he noted that altcoin charts suggest Ethereum, Cardano, and XRP are positioned for significant movement, stating, altcoin charts screaming Ethereum, Cardano, and XRP want to ignite. Gambardello specifically compared the current XRP cycle to that of 2017, highlighting a similar pattern of consolidation. He pointed out that after an initial surge, XRP consolidated for 6 months before its next breakout, a trend he believes is repeating now. This observation offers an intriguing perspective on XRP's current trajectory. I am not a chart analyst, but it is quite evident that XRP's current behavior closely resembles past cycles. Specifically, it bears a striking similarity to the 2017 cycle, which is why the focus is on that period. Historically, XRP consolidated before experiencing a significant upward movement, and the charts suggest a similar pattern may be unfolding now. The argument presented in the reference video emphasizes this point, asserting that the charts indicate we are at a pivotal moment where XRP may be poised for a significant move. This is a pivotal moment for XRP to gain momentum. While no specific timeline has been promised, the broader context suggests that now is the period to anticipate significant movement. Whether it happens today, tomorrow, next week, next month, or next quarter, we are currently in a phase where any day could mark a major shift. The strength of XRP during this consolidation phase, particularly maintaining levels above the $2 price point, is a clear indicator of its resilience and market health. This period of stability highlights XRP's remarkable strength, and these observations align with what I have consistently emphasized. The analysis is accurate and reflects the current state of the market. Here's an analysis from chart analyst Greg Crypto regarding XRP. He notes that the market appears constrained, leaving little room to move, which often signals an impending breakout. The critical question remains, will it break downward or surge upward? Greg believes it is likely to move to the upside, and I share the same perspective. This situation reminds me of the period leading up to November when XRP eventually experienced a significant breakout. At the time, the exact timing of the movement was uncertain. As the election approached, I expressed on this channel my belief that the breakout might occur after the election, as markets typically seek clarity. Markets generally respond poorly to uncertainty, and once the major question of the election outcome, whether a Trump or another candidate would win, was resolved, it allowed investors to plan based on the expected policies of the winner. In this case, it was ultimately Trump. This development was not unexpected. At that point, XRP had experienced nearly 7 years of consolidation, with its volatility range steadily narrowing as it approached the apex of the trend lines identified by various chart analysts. The question was whether a breakout would occur before reaching the apex of these trend lines, and if so, whether it would move to the upside or downside. Given the prevailing bull market conditions, I asserted that the breakout would likely occur to the upside, which is exactly what transpired. To me, this outcome was clear and logical. With that in mind, I maintain the same perspective. We remain in a bull market. When this asset experiences a breakout, it is likely to move to the upside, entering price discovery and generating significant momentum. While no outcome can be guaranteed, this scenario appears to be the most probable, barring an unexpected black swan event. That being said, there is a possibility of short-term pullbacks. I continue to share this perspective, not to be overly cautious, but to provide a balanced view. Despite these potential fluctuations, I remain highly optimistic and enthusiastic about the long-term prospects of XRP. However, it is important to note that several analysts are cautioning about the potential for downward movement, primarily due to liquidity considerations. Chart analyst Steph is Crypto shared an update this morning regarding XRP, suggesting that it may sweep $2 before a significant upward movement, noting that the liquidation cluster remains intact. The highlighted area of liquidity, as shown on the chart, supports this observation. While this outcome is not guaranteed, several analysts, including Crypto Insight UK, have pointed out the likelihood of such a scenario under similar market conditions. Although no promises are being made, these analysts acknowledge that this type of market behavior is common in comparable circumstances. Furthermore, they emphasize that such a move would typically signify the bottoming of the current chart structure, followed by a resumption of upward momentum. As such, there is no need for concern at this stage. This article, authored by Rakesh Upadhyay for Cointelegraph, highlights the possibility of further downside movement. It's worth noting that I have observed similar sentiments from multiple analysts. To clarify, there is no definitive consensus on the most probable short-term trajectory for the market. Upadhyay points out that the flat moving averages and the RSI, which is just above the midpoint, indicate that the XRP/USDT pair may remain range-bound between $2 to $2.65 for the next few days. However, he suggests that a significant move may occur sooner rather than later. In the coming days, many analysts are predicting significant market movements that could occur either imminently or in the very near future. According to one analysis, if the price closes below the moving averages, the pair could decline to $2. Conversely, a break above $2.36 could pave the way for a rally to $2.65. Furthermore, a sustained break in close above $2.65 would signal the beginning of a new upward trend, potentially targeting $3. Notably, numerous analysts are emphasizing the importance of the $2.65 level in their forecasts. The blockchain backer Egre Crypto and several others have made similar observations, though this is not intended to be an exhaustive list. Numerous analysts reference this perspective or something closely aligned with it. Additionally, it is noted that a break below $2 could potentially lead to a decline below $1.61. This represents one of the most bearish scenarios cited by analysts, though even in such a case, the downturn would likely be short-lived. To be honest, I have not seen any other analyst discussing $1.61 again. He appears to be the only one. Typically, when reviewing analyst opinions, if there is an outlier, such as one individual providing a significantly different prediction compared to the rest, it is highly uncommon for that scenario to materialize. While it is true that occasionally improbable outcomes do occur, they are rare. As such, I would not base any expectations on that likelihood. Chart analyst Cassie Trades has shared insights on the XRP/USD chart, noting the potential for a downward move before a recovery to the upside. She also predicts significant price movement in the near future. According to Cassie, XRP is approaching the apex of its macro consolidation phase, with the price hovering above key support levels as funding rates quietly increase, a potentially risky combination. As of this morning, funding rates have risen to 0.01% per 8 hours without a notable breakout. If funding reaches 0.02% or higher without a price move, this could indicate a high likelihood of a liquidity sweep to the downside. The current market behavior suggests that algorithms are closely monitoring the buildup of open interest while prices remain stagnant. This scenario increases the likelihood of triggering a flush of unprotected long positions. If the $2.25 level fails, key support levels at $2, 1 cent, $1.90, and potentially even $1.55 could come into play. While $1.55 represents a technical low, it is not guaranteed that prices will reach this level. However, such a drop could create the momentum required for a significant wave 3 breakout. Volatility appears almost certain. Whether it's a final dip or a major breakout, the next move is likely to set the tone for the remainder of the summer. Many analysts anticipate significant market shifts during this period, with potential for notable developments. While the timing remains uncertain, the prevailing sentiment suggests that the best opportunities lie ahead, even if they materialize after the summer. I understand that the wait has already been over 7.5 years, and I am prepared to wait a bit longer if necessary. I am confident that it will happen, regardless of the timeline. Please note that I am not a financial advisor, and you should not base any financial decisions on my statements or writings. Doing so would be highly inadvisable.